At the end of today's video, your ability to catch more precise and then amazing day trades should be up to a higher level. Welcome back to the channel, guys. If you're new here, my name is KOMMONFOREX and I've been trading Forex profitably for the past 5 years. In today's video, we'll be going back into the realm of day trading. Remember what I said in my first ever video? I talked about having the skill level to be able to catch scalp trades, to be able to catch swing trades, as well as day trades. Depending on the setup I find, be it swing, day trade, or a scalping setup, I can always find trades using whatever strategy I use in my arsenal. My toolbox is filled with so many tools I can use, regardless of whatever scenario the market throws at me, regardless of the pattern I see, regardless of the season we are in. So today's video, I'll be teaching you exactly how you can catch amazing day trades using just Fibonacci. If you're new here and you've not watched my video on Fibonacci, I'm going to leave that at the end of this video. Just make sure you go back, pay attention to whatever concept I make mention of in there. And trust me, it's going to be an extremely eye-opening experience for you, because I simply break down every single Fibonacci concept to the minutest detail. In today's video, we'll be looking at an example of a trader using the same Fibonacci, but this time from a day trading perspective. I traded 2 GBP pairs yesterday, namely GBP AUD as well as GBP NZD, and the simple tool I used to catch these trades was Fibonacci, which I'm going to be explaining perfectly in today's video. If you are new here, you just discovered this channel, I want you to just look down below and then hit that subscribe button. If you've also been with me from the beginning and you've forgotten to subscribe, I also need you to take some time and then hit that subscribe button. I just checked my statistics today and I realized that only 50% of my viewers are actually subscribed to this channel. So I wanted to take a pause, hit that subscribe button. I also need you to smash that notification bell so you get this for anytime I go live or anytime I drop a new video. You can also share this video with as many beginner traders, as many struggling traders you know, to help improve their trading game as well. So without wasting my time, like I said, I traded both GBP AUD and GBP NZD with this simple Fibonacci technique. And when we talk of Fibonacci, what is Fibonacci? Fibonacci is simply a tool which you use to measure the depth of a retracement on a market. If you remember the trend continuation strategy I talked of, the easiest thing you can use to trade it is Fibonacci. If the market goes for a buy and then it pulls back a bit and you believe it's actually going to go for a buy again, the main tool you use to catch that particular trade is Fibonacci. If the market goes for a strong sell and it pulls back a bit and you believe it's actually going to go for another sell, meaning that continuing the prior move it did, the main tool you want to also use to catch that particular trade is what we mean by Fibonacci. Let's jump right onto the charts. Let me explain in detail how I took both these trades, the concepts I used, the time I took the trades, as well as how many pips I was able to milk with my community from this particular trading setup. So guys, a brief explanation before we continue. Like I basically said, when we talk of Fibonacci, we basically talk about, how we measure the depth of a pullback or a retracement. So now let's start with a bullish move. If you say bullish move, it means that the market going for a buy. So let's say the market buys like this and then it pulls back. So when we talk of Fibonacci, it means that we use Fibonacci to catch this other buy to the upside. So Fibonacci is what helps you catch a trade here, expecting it to go all the way up. So, and then mind you, this pullback can also end up here. If it comes all the way down here, that's what we basically mean by a support. So support and resistance can also be termed as a form of Fibonacci as well, just like it's basically the 100% or the 0% Fibonacci. Then we come to a sell or a bearish move. The market can also easily sell, pull back a bit, then continue the prior sell it did initially. Fibonacci is how you are able to catch the market going back down for the sell it went on initially, basically. And then in this case as well, the depth of the pullback can also go all the way here. It can be here, it can be here. It can also go all the way back to the initial starting point, which makes it a resistance. In this case as well, resistance is also basically a form of Fibonacci, just that it is 100% Fibonacci level as well. What happens is that the market has actually been segmented into various percentages that enables us to know what points that the market reverses to. So basically where it starts from and then where it ends actually. Where it starts from being 100%, where it ends up being what's the 0%, then we have the 50%, which is actually in the middle. So let's say we are further dividing 25% here, and then you also want to have your 75% here as well. Same thing also applies for the bearish move. I'm not going to waste too much time on that. So now if you look at what basically happens is that now we can label our key levels or label our Fibonacci. So our 50% is here. We basically make here our 25%. This is 0. That's where the move ends. 75% and then 100%, which is basically the bottom of the whole move. So you realize that if you come and look at your bearish move, the same thing also applies. It starts from 100, ends at 0, 50% in the middle, 25% down here, 75% as well up here. We have the best key levels where you expect the retracement to end up. These are the ones that have the most repetitive nature. It means that if the market pulls back, they mostly end up in that particular key levels, in that particular percentages. And these are, for me, I use my 50%. I use my 61.8%, and then I also include my 78.6% as well. So now what do we simply do? We simply just find our 78.6% down here, and then we find our 61.8% as well somewhere here. That's what it basically means. So now 61.8% here, and then our 78.6% as well. What happens is now we simply eliminate the 25%, 75%. So now we have our 50% here, 61.8, 78.6. So we basically expect the market to either pull back, end up on the 50%, pull back, end up on the 61.8, or pull back, end up on what's the 78.6%. So it can be on any of these key levels. So the same thing or the opposite applies for the bearish move as well. So if you like what you're watching today, I want you to just take some time, smash that like button, also look down below and then hit that subscribe button, also smash that notification bell so you receive a notification anytime I go live or anytime I drop a video on YouTube. Let's get back to the video. So now that we've explained our Fibonacci, now let's go on to the chart and then let me explain to you how you can use it to take advantage of trading on the market. Basically, we are on our 50 minutes time frame because we are trying to catch day trades. Like I've always said, I'm on my 50 minutes, my 1 hour, 30 minutes, also on the 4 hour on occasion, because basically the 4 hours like a marriage between the lower time frame and the higher time frame. The 4 hours basically like a marriage between swing and then day trading setup. So we need our point of inception where the move starts from, which is 100%, to where it ends up, which is what 0% down here. You can see my key levels here: 78.6, 61.8, 50%, 100 at the top, 0 at the bottom. And then like I always said, no need for me to mark out my support and resistance because my 100% represents my resistance, my 0 represents my support. And I want you to also get the same thing on your screen. So I'm gonna go to my settings. So you take a snapshot of how my fib looks like. If you want to have the same thing, just take a snapshot of it. Let me give you a second to take these snapshots so we can just continue. All we do now is we wait for the market to tap into any of our key levels. What does it mean? It means that we basically either expect the market to move, hit the 50% pullback, or hit the 61% pullback, or rather what hits the 78.6% pullback. Or one thing I always teach my mentees is any point along this whole region, as long as you see proper price action and then the market gives you proper confirmation in here, you can also take advantage of trades in this particular zone as well. So now we wait and see how the market reacts to our key level. So you see it starts dropping from there. A lot of traders will mistakenly see a bearish move here and then jump in and then try to take a sell here. One thing I always teach you is that if it does not get to your key levels, if it does not give you an entry on any of your key levels, do not jump in to take any trades. So look at what happens. You see it dropping nicely, then all of a sudden it pulls back and then goes all the way up to the top again. Then it's eventually what hits 50%. What do we do? Like I always tell my students, never jump in front of a moving train. You want to wait to get your bearish presence, proper price action, and then your confirmation before you take any trade. So we wait for the next candle. We see a small bearish candle open and close. So what we basically see is what we call a hanging man. We wait and then we finally get another bearish candle opening and closing, giving us what we call a morning star. So after this morning star confirmation, all I do next is I now bring my risk to reward for my short position, where it's basically my stop loss. My stop loss is right up here. So you can see the risk to reward for this trade is about 14 pips. So we can now, let's say, choose to make it 20 pips to be on the safer side. You are taking a day trade, so you should be sufficient with somewhere down here. As it keeps moving, I basically want to see if it's going to go into any of my key levels. So I keep adjusting my stop loss, I keep adding positions as the market pulls back and then it keeps going down. So now, remember what I always tell you, if I'm risking 20 pips on a trading setup, I'm at least targeting that particular 20 pips. So that initial 20 pips, I'm not going to let it go to waste. So now, first candle comes in. So let's see how it goes. Hits your initial take profit. I think we got a little pullback. So initial profit gave us about 30 pips on this. Then we got some initial pullback. Then it eventually went all the way down. So we got a pullback. This is basically the 15 minutes. So eventually hit what the final TP. It went down to hit the second TP I had at the bottom there as well. I also traded GBP AUD in addition as a result of the correlation it has with GBP NZD. So now let me just switch and then open GBP AUD as well. And then we go all the way back to yesterday. So this was where I took the trade. Look at the time, around the time I took the trade, around 10 a.m. So on GBP AUD as well, Wednesday, I also go to around 10 a.m. You look at what happened. You see the same similar movement also happened on it. Dropped, pulled back, then it went all the way now. Screenshots of both trades, GBP AUD, GBP NZD, both giving me well over 70 pips. It was a simple day trade, but they've all both giving me over 70 pips on the setup. Sent it to the VIP, as you can see. Just go back, watch my video on Fibonacci, apply it to your trading. Make sure you apply price action. Also make sure it is a confluence with any strategy you use to trade, be it trend line or whatever. So guys, we've come to the end of today's video. I hope it was extremely helpful for you. If it was, I want you to look down below, hit that like button. I also need to subscribe to this channel, share with as many retail traders you know as possible. You can also keep up with me on my socials, KOMMONFOREX on Instagram, KOMMONFOREX on Telegram, KOMMONFOREX on Twitter, KOMMONFOREX on TikTok as well. Also hit the link in the description to join my trading community on Telegram, where I share trading signals, trading books as well. You also want to hit a link in the description to also sign up with my recommended broker with the best trading conditions, tightest spreads, instant deposits, and then withdrawals. So thank you very much for watching today's video. Till next time, my name is KOMMONFOREX, and I hope I left you better than I found you.